Well, thank you so much for sticking with us. It's been an end to the session coming close, and one step away from drinks. So there's just going to be a quick Q&A after this session, so feel free to drop in questions. There's a QR code behind me. Today we have with us two rival bankers. Sparring at each other, maybe. But they actually know each other. They used to work at...
They're actually old friends.
Yes.
Old friends, that's right. So no fights.
Yeah.
So they promised not to badmouth each other. So I think we'll just dive into it. Hannes, I just want to ask you, first of all, because I know you advise clients globally, family offices around the world. We're seeing increasingly that they're becoming more institutional. I think you've mentioned that. And hiring, for example, from sovereign wealth funds and the like. Can you talk a bit about this trend and what's driving it?
Yeah, sure. And I think, first of all, I wanted to say it's fantastic to be in Hong Kong this week. I mean, Paul Chen said this at the beginning, the energy this week is incredible to bring art, sports, government, finance, business together. It's just something very special that's being created here, and it's great to be part of that energy. What we're seeing in the family office space, and we work with about 1,800 family offices around the world, average net worth about 2.4 billion. What we're seeing is a really important trend to globalization, institutionalization, and then handover to the next generation that's really changing the way how these family offices work. But as a background to that, I think we should all remind ourselves that it's a very interesting age we live in, which is three trends happening. One, biggest wealth generation in history. So our boss, Andy Sieg, talks a lot about the fact that 100 trillion in wealth are being created in the next 15 to 20 years. 100 trillion in wealth, a lot of that, by the way, in Asia. It's a huge amount of additional capital available to families. Second thing, wealth handover to the next generation. By 2045, people think that 85 trillion in net worth will be handed off to a next generation that's better educated, more international, and much more technology savvy than ever before. And the third trend is, well, we've heard about this in all the previous panels, what is happening today with artificial intelligence is going to change the way how we do business and how we live for the foreseeable future. And so in a situation when you have such a creation of wealth, handover of wealth, and such a change of economic fundamentals, what is really important is to bring together the families of the world that have capital, the governments, the sovereign wealth funds, the private equity firms, the companies, and the innovators. And that's really a lot of what is happening in this family office universe, and why I think we are all here, because we know there's an opportunity to invest into areas that will drive value and will drive growth in the future in a way that we haven't seen in the past. And I thought it was very interesting when Paul Chen earlier talked about the fact that Hong Kong wants to attract not only capital, but entrepreneurs and innovators, because that's a lot of what our work today is about as a bank, to bring together all these players in the capital space and help them find right ways of deploying equity capital and debt capital to good usage for the innovators, but also good returns for families. And so are we seeing sophistication? We're seeing incredible trend towards more sophistication in family offices because the investment environment is so interesting, but also requires specialized knowledge. And so, yes, we're seeing people move from sovereign wealth funds, from private equity shops, from investment banks to family offices. And what that does for us is it lifts the level of dialogue that we're having to a lot more interesting topics and a lot more specialized topics. I think it was Joe who said 2 panels ago, he talked about the fact that people are buying structured debt, people are buying quantitative investment solutions, people are looking at direct investments. Those are topics that 20, 30 years ago, no one would even have thought about. But today, what we see as a bank is family offices, important players that private equity firms want to talk to, sovereign wealth funds want to talk to, and all the big corporates around the world want to be in dialogue with.
Okay, well, Paul, I just want to get your thoughts on that, because I know you advise a lot of family offices in Hong Kong. So, yeah, where do you see them?
I mean, I agree with everything that Hannah said. I think one of the great things about Hong Kong is that it's got the tradition of family offices. It has had this concentration of wealth for so many years. But what we're seeing now is a new generation of family offices. And the incentives that we've seen in Singapore and now in Hong Kong is seeing a lot more start-up family offices. So when we see the way that these incentives have been framed, particularly in Hong Kong, for example, the starting point in terms of expenditure is $250,000 US dollars or thereabouts, as compared to when we did a family office survey last year for the $1 billion plus family offices, the average cost of running the family office was nearer $6 million. So, you know, if you're comparing the two, the $250,000 expenditure, there's going to be a lot more outsourcing. It's going to be a smaller pool of employees. So I think, you know, everybody starts somewhere. So we're seeing in Hong Kong a lot more of these startups. And it's also, of course, correct that when you start your family office, you want to start small. You want to make sure you're getting the right people on board. You're wanting to avoid some of the mistakes that Joe mentioned in the previous panel of hiring the wrong people. So I think, but I think what these incentives have done in Hong Kong is to reignite Hong Kong, put Hong Kong back on the map as a place where people should look at to establish their family offices, which is why the numbers we're now seeing coming through in Hong Kong, as I think Mr. Hui is saying, has been saying this week, you know, we're well on course to have the 200 new family offices this year. But, you know, I think I would say the numbers are important, but I think we should also be looking at quality, not quantity. And I think that's really the thing that we need to focus on.
It's true, like that Hong Kong feels like it's come back, you know, definitely compared to COVID years. But, you know, generally, I think families in this day and age, they really want diversification. They don't want to put their eggs all in one basket. And so I think many of them have had, you know, one family offices in many places, not just one place. So, but, you know, I mean, I know Hong Kong has pushed very hard to attract money, and so is Singapore, Dubai, other hubs. Where do you see the money going to now? Yeah, Hannes or Paul, either of you.
If you want to start.
Yeah, well, look, where do we see money? The money goes everywhere, because when you're setting up a family office, you tend to start in your home jurisdiction. You know, where are the family, where are the assets, where is the family business? It then really depends where you want a footprint. And that can be in any number of jurisdictions. So then you start looking at what the various jurisdictions offer. And then you're looking at the tax regime in the jurisdiction, you're looking at the regulatory regime in the jurisdiction, you're looking at, you know, the markets you want to access. There are also a lot of softer issues, such as immigration policies, and I think that's one of the places where Hong Kong really scores heavily, is that the immigration policies are so flexible here that if you're trying to relocate key members of staff or family members, there's nearly always a way into Hong Kong. You're also looking at quality of life. You're looking at, you know, the fact that Hong Kong now has 4 universities in the top, 5 universities, I think we heard this today from Mr. Chan, you know, in the top 100. But there was another survey from the Times Educational Supplement which said that Hong Kong occupied the top 4 places in the top international universities. So Hong Kong has a lot to offer. So, you know, I think it's people are going everywhere, but it's very much a personal choice. But I think the good thing for Hong Kong is that it's gradually getting its place back. I think people are remembering what Hong Kong has to offer as a financial centre. So bit by bit, it's becoming, once again, a place that people who are wanting their footprint in Asia are beginning to look at.
It's interesting because, you know, one of the things we've seen, we do this family office survey every year. And it's become the biggest survey in the financial industry, actually, bigger than any other player that we know of. And what it gives us is a very good insight into what the families are really thinking about. We're finding 70% of families either have a family member and passport or investments or other types of direct connection with more than one region. So only 30% of families are in one region only, 70% are more. So globalization for these top-tier families in investments and lifestyle has always been important. In the last year, we've seen a significant pickup in families talking to us about geographic, not only location for family members, but also location for assets. And so asset location and where do I park my money to be safe in different geopolitical scenarios has become a lot more of a concern all around the world. It started with some of the elections in Europe, elections in France, elections in the UK, elections in Germany, where people started saying, like, okay, I want to plan for different options depending on how the tax environment changes. It continued with the elections in the US, where people were asking a different place to be. And so we actually published a white paper because it became such an important topic that we said, how can we help people put your choice of asset location and family location into a framework? How can we help you decide where you should be? And it's really focused on 4 areas, right? Lifestyle, which Hong Kong is fantastic for that. But lifestyle, you know, people want to live somewhere where they feel comfortable. Second one, tax. Tax is one of many scenarios, but it's an important one. 3, security and safety of the financial and legal system. Very important to families that they feel they cannot suddenly lose their assets without understanding why. And then 4, which I think Hong Kong again scores very high on, is an ecosystem of highly qualified intellectual capital and service functions. And so with these 4 factors, it helps families assess where they want to go, especially hubs that you said. For us as a bank, our 4 international wealth hubs outside of the US are Dubai, London, Singapore, and Hong Kong, importantly.
So where are they going?
We're seeing these 4. It depends a little bit on where they're coming from and why they're moving. But when it comes to asset location, again, we do see a trend that's very much focused on these 4 offshore centers and the US. Definitely an interest in Asia. I would say capital in general is always looking for efficient capital allocation, right? It's always looking for interesting returns for the amount of risk taken. But there's always some trends. Now, what I've seen in the last 2 to 3 months, there's been a trend in international family offices to invest in China more and in Hong Kong more. Now, for sure, the market has helped, right? Like Paul Chen has said, the Hang Seng is up, I think, almost 20% year to date, much more than the S&P or any other market. But family offices have a lot more interest, again, in the region, in East Asia. They want to understand better what are the support programs that the government has put in place, not just for family offices in Hong Kong, but also for the economy in general, in order to create that consumer economy that ultimately will make the region highly interesting for any investor.
I just had a slightly different question. It's about diversification, but it's kind of focused on mainland wealth. I mean, if you could get the chart up on household income. Well, basically, in China, 60% of the household wealth is held in cash and deposits. I think, yeah, about there. And then compared to 12% in the US. I just wanted to get your take, because I know there's this tremendous demand to diversify your wealth for mainland Chinese. And at the same time, it's very hard to move money offshore at the moment. How would you advise these clients that, want to do this, want to diversify their money, but can't right now?
Well, I mean, I think probably it's more to actually for Hannes, because that's more about the investment strategies that they can employ onshore. Clearly, as international banks, we deal more with Chinese families that have their money offshore. And there, the diversification conversation is the same as we have with clients all around the world. And as Hannes has been saying, you're looking for not only diversifying your investments geographically, you're looking at diversifying your succession planning strategies. You're looking to have your entities in different jurisdictions, family members in different jurisdictions. And as you were alluding to earlier, really, passports and citizenships. It's not so much necessarily moving, it's just having optionality. So people buying passports in places like Malta, or getting the right to reside in places like New Zealand, so that they have their escape routes if geopolitical issues sort of turn against them. But it's more that we're seeing than, because as you say, helping the online Chinese with onshore money is a more difficult issue for international banks.
And Hannes, what are your thoughts on this?
Well, so the first of it is, right, Chinese companies are increasingly international in their operation, as we all know. And I think if anything, one of the things we see when it comes to innovators and entrepreneurs, what people are realizing, and this is why I think family offices are so interested in this region, what they're realizing is that technological innovation, that is the core part of AI, but then also healthcare, fintech, deep tech, education, a lot of this is actually happening here in this region. And I think if DeepSeek has shown us something, it's very hard to predict which regional player, it be in the US or in Europe or in Asia, will actually become the technology of the future. And so people realize that diversification from all directions is really important. And just like it's important for Chinese investors, it's important for international investors. And access and familiarity become big topics because people want to understand where they invest, and they want to have the ability to access the best investment opportunities in the region. So I think what's very important for us when we work with our clients, opening up our global network. We've got presence in 50 countries where we've got very deep connectivity with corporate players, companies, and families all around the world, opening that up to these investments, to these investors, to make them more familiar, and then to connect them so that they can also get access. And so, for example, one of the things we do every year is we have a conference that's a global family office conference. Last year we had 150 people there. Average net worth was over $4 billion. And it's just people from China, Hong Kong, Latin America, Europe, North America, Middle East. Very important these days is the Middle East. There's a lot of interesting things going on there. Coming together, exchanging best practices, talking about their businesses, and finding ways, again, to channel capital, access, and familiarity, build familiarity for investments all around the world. So to your question, I think diversification is incredibly important. Iqbal said that before, and in order to achieve that, creating familiarity and access is really key, and that's what we do by providing a global network.
I just had another question. It's more theoretical, I guess. But, you know, we amidst all this diversification and wealth transfer, there are a lot of mainland families with entrepreneurs based onshore, and the kids are in the US, they've got residency there. You know, these are less benign tax regimes. So how would you advise them in terms of, you know, inheritance tax could hit 40%, for example? How would you advise these clients in terms of, you know, efficient wealth transfer?
Yeah, I mean, you always start where the family is based because that is where they're going to have their tax exposure. And then you're trying to find the right tools to help them to transfer the wealth to family members in different jurisdictions. So, I mean, entities like such as trusts, you know, are used quite commonly for the offshore wealth that they have. But you've got to remember that things like trusts are just tools, they're not solutions. And it's really about understanding with families what they're trying to achieve with their wealth, what they're trying to do. Not everybody is thinking about transferring wealth to their family. You know, we've talked about philanthropy being a key issue for Hong Kong and one of the core pillars that we're focusing on. So it's really more about understanding that these entities, whether you're talking about trusts, whether you're talking about foundations, whether you're talking about family partnerships, family companies, whatever it might be, they're a means to an end. But the conversation always starts with, what are you trying to do as a family? What are you trying to achieve? How are you going to, if you want to transfer wealth to the next generation, how are you going to prepare them to be recipients and stewards of that wealth? But it all starts with what your objective is at the outset, what your goal is, and that's where we spend a lot of time with our clients. I mean, there's not one solution that fits all because the rules for trusts in the UK, US are one thing. If you go to continental Europe, they're a non-starter. So it really depends where the family members are going to be. So with all of these solutions as well, or all these tools, it's about keeping your options open.
What do you think, Hannes?
Look, I think Paul is spot on, right? In terms of planning, a structured planning process is really important, and taking the time to set things up properly before the move happens. Again, one of the reasons why we published the white paper is because, like Paul alluded, in the end of the day, usually there's a lot of factors that are not tax related that are equally or more important that are driving the decision for what the family wants to be present in. And so I think there's a lot of these questions that families really need to work through. I would say that in general, our bread and butter business, what I do every day and what my team does every day, is we're really focused on if you want, preparing wealth for the family, right? Making sure that the family maintains the wealth, has the direct investments, has the structured credit, has the importance to invest and to use balance sheet from the bank. That's our day-to-day business. But what we also do, which is very important, is we provide advice in topics that Paul talked about: family governance, family organization, international tax planning, the topics that the government here in Hong Kong is promoting, which are so important and touch the heart of families. Philanthropy. We've got our head of philanthropic advisory here in the room. Actually, she flew in from New York, used to work for Mayor Bloomberg before. We got art advisory, right? The government is now building these art facilities at the airport. Those are topics that are very close to the heart of people. And aside from the question how you structure tax, they're very important in the decisions that people are making for where they want to be based.
I think I just said we're running out of time, so just a last question on, what do you think might surprise family offices this year that you haven't considered? Is there any risk that you think on the horizon?
I mean, I think when we did our family office survey, I think it was covered in the last session, which I didn't really hear, but cybersecurity, I think, is the one area where I think family offices have underestimated the investment they need to make to protect themselves properly. So, unfortunately, I didn't hear the session because we were preparing for this, but I think that's probably the area which it was right for Bloomberg to be focusing on.
By the way, there's something we saw in our survey, right? One of the things we found, the number one area that most family offices feel underprepared or badly prepared for globally is cybersecurity. And again, we just published a white paper on cybersecurity because it's an important topic, and there are some very good providers that people should be talking to. It's a topic that can very easily be outsourced, right? So cybersecurity is something that can be outsourced. It's a technical topic. It's something that not every family office needs to do at home. It is something where you can very efficiently use outside providers. The other part where I think family offices are going to be surprised is we are in a world, and someone said this before, that is not black and white, right? We are in a world where like tail outcomes could happen that we don't expect today. And I think the key thing that I would recommend more family offices to do is look at systematic opportunities to maintain risk exposure in the portfolio and protect themselves against possible negative outcomes. It's something that more and more hedge funds have done, macro hedge funds in the background. It's something that sophisticated family offices should also do.
Okay, great. I think we're running out of time, but thank you so much, everybody. I think we deserve a drink.
Thank you.
But also, please fill up the survey form. It'll be valuable feedback for our team. Thank you very much.